Welcome everyone to the CFO Swinger Watch newsletter's technical analysis video for the week of April 15th through 19th. Now I have a lot of important things to talk about, but in a very succinct manner, so let's get right into it. So the S&P 500 or SPY has finally retested its daily 50 SMA, this dark blue line that I'm following with my mouse cursor. And as I've told you guys all of last week and even last week, we need to be watching out for this ever so rising daily 50 SMA, as that imposes a lot of upside risks for us if we are trying to be net long. But of course, I've cautioned and warned you guys for the last couple of weeks that we need to slowly back off in the markets, especially on leading groups, right? Like semiconductors, tech stocks, cybersecurity stocks. And so with this daily 50 SMA officially retested last Friday, and on top of that, converging at my daily $510 support level, we saw some late day buying by the bulls. Now, the bulls have a pretty important role to play here because this daily 50 SMA has now officially turned into the last area of defense. And tagging along is this $510 daily support level. Now, if you guys remember, I've told you guys that this daily 50 SMA can ideally converge right at this daily $510 support level. And even more ideally will be the fact that we can be seeing the price coming down and retesting at the $510 level, coinciding with the daily 50 SMA. And so that's exactly what happened last week, as we saw the ideal scenario turning into a realistic scenario. So with this last line of defense for the bulls, there is an actual chance for us to see a bounce tomorrow, because again, do you guys remember when we first retested and reclaimed the daily 50 SMA? It was back on November 3rd. So it's been kind of a long time. So for the fact that we have now come back down to retest the daily 50 SMA, the buyers have to hold this area as a last line of defense against the ever so increasing sellers. Now, with this official retest, this tells us, number one, that the short-term trend is officially to the downside. We know this because the daily 10 SMA and the daily 21 SMA has also shown a bearish crossover where the daily 10 has crossed below the daily 21. Okay, so the daily 10 is my red and my daily 21 is my light blue line. And number two, this also tells us that from a longer term perspective, there are net short sellers who are looking to come into the markets to push the prices lower. So these are the people who have been sitting on the sidelines waiting to short the market. And so once that occurs, we can see a more surge in the selling volume to officially break below the daily 50 SMA and break below the daily 510 support level, and eventually head back down and hit my next levels of support, which is 503, and obviously this gap fill area that I've told you guys last week, and most importantly, the daily 200 SMA. Okay, now why do I say the daily 200 SMA? Well, that's exactly what happened for the entirety of quarter three of last year. So in quarter three, we got a very textbook negative 10% market pullback. And once we lost the daily 50 SMA, the price basically targeted the daily 200 SMA. So our next warning sign that we need to be watching out for is this daily 200 SMA that's also ever so crawling up higher and curling up higher. And so eventually, I will want to see the daily 200 SMA converging at 477.50. And if you guys forgot what that level is, well, that is the official floor that I have for a negative 10% pullback from our current all-time highs. So if I just drag this down, okay, right there. So this is a textbook pullback of at least 9% from all-time highs. So that 5 to 10% textbook percentage range is exactly what we need to be looking out for, and 477.50 gives us that maximum. So for short-term wise, if you go back to the current candlesticks here, I do believe that tomorrow we can either get a small gap up, like I've said earlier, or we can see a nice sustained bounce to the upside and actually close green with relatively low volume. But as I've said in the newsletter, every single bounce opportunity will be a time for us to short, because those bounces are being used by the net directional longs who haven't been able to yet get out, right, from this ever so increasingly bearish market conditions. So as time goes on, I would expect to see my short-term daily 10 and daily 21 SMAs acting as areas of resistances. And as they're currently curling down, I would expect to see the daily 50 SMA acting as an area of support and curling up higher. And once that happens, we'll see the price tightening up, right? This is exactly what I've shown here with my price path structure. And with this tightening price action, we should be able to see another breakage to the downside, eventually breaking below the daily 50 SMA. All right, so we should be seeing some very, very volatile oscillations back and forth in between this range that I've outlined from 517 to 510, which occurred back in early to mid-March. All right, with that, let's look at our first and only swing trade idea, LULU. So before I get into this right here, I want to focus on this right here. So if you guys remember, lululemon was a swing trade idea from November. And in November, I said we can either long over 432.55 or we can long over the current month's highs. And that month was November. And we were looking at it in early November here, the first 2 weeks of November. And I've briefly basically outlined, just to kind of summarize here, that if we're able to break over the month's highs, we should be seeing a very nice parabolic move up. And that's exactly what we got. So I've drawn this back in November, right? This curvature here, this curved move up higher, and that's exactly what we follow, right? To a T, because we continue to make all-time highs until we reached over $500, right? So the previous all-time high was sitting at $485.83, but we broke over that and we hit that $500 psychological whole number level. And so that was an amazing swing trade. And if you guys caught that, hopefully you guys had a great swing trade as well. So now the only reason why I wanted to mention that is that unfortunately, we have completely wiped out all those bullish investors and traders who helped and aided the price to hit these new all-time high levels. And right now, this name is bogged down by a bunch of short sellers. In fact, if I go on the weekly time frame, and if I, let's make sure to put that away to not confuse anyone. If I bring up the RSI, the Relative Strength Index, the weekly time frame is currently oversold. The RSI value is sitting at 27.66. That's not good. All right. And if I go back on the daily time frame now, the RSI is sitting at 18.51. All right. It's in the teens soon. So, there's still a chance that the RSI can continuously move down as long as the underlying share price continues to move down as well. And we could possibly see an RSI value of 10 or even 9, a single digit number, if we continue to see this sell-off. Now, here is where we need to come in though, because I don't think that we can be seeing a further sell-off, because if I go back on the weekly time frame, we have a major support level that we are currently heading towards, sitting at $330.50. And this very big and significant level of support matters because of the fact that the RSI is sitting at 27.66 on the weekly time frame, with the fact that if we do come back down to $330.50, we should be seeing a very good pivot. And at that point, the RSI should be even lower than last week's close. So this 330.50 whole number level should provide us with a very good pivot, and we should be seeing a very large bounce that can last for about 2 to 3 weeks, judging off of my experience with these type of large moves to the downside and then subsequent sharp move back to the upside. So if you take a look at the weekly 200 SMA as well, we have just broken below it last week. So there's a chance that we can see an official retest of this weekly 200 SMA. And that means that we need to have first an actual pivot and bounce. So this could actually be one of our price targets, which I've also outlined in the newsletter as well, for this weekly 200 SMA. So again, this can either be a very good day trade if we do come back down to hit $330.50, or if you guys want to be more specific, $330 or 46 cents. But again, I just like to round up to the whole numbers. We can be seeing, again, if we do see a nice pivot at this level, we can be seeing a very good, very quick day trade. But if we do see some very nice closes after a potential bounce, we can be swinging this name as well, even if the market conditions are getting worse. Okay, so now as a general reminder, we saw a lot of consumer or retail stocks, or specifically, apparel names like lululemon or active fitwear companies moving down first, right? We saw them coming down from the beginning of March all the way up into late March, and that's where lululemon comes in, where we saw that massive gap down the week of March 18th, in the middle of March, from earnings. And after that, when the entire group started to move down, we saw some more sellers coming into lululemon, especially the longer term sellers, short sellers, just absolutely pounding the stock down and kicking out all the bulls who have aided in that large push up higher into new all-time highs back in early November to late December. So for us here, this is a potential trading opportunity to be very active. So make sure you guys check the newsletter as well for any more detailed information that I put on there. But yeah, that is it for this video. Make sure you guys smash that like button down below and hit that subscribe button while you're at it. But most importantly, hit that notification bell if you want to know when I am live and when I have uploaded a new video. And that is it from me. Have a great rest of your night, and I'll see you all tomorrow morning at market open. Good luck.